Welcome back to another live trade case study. You're looking at a chart of gold. Currently, I am on the 15-minute time frame. I'm looking to take a long. We are almost at 8 a.m. Okay, you can see the time down here. Now, you're looking at the live real-time price chart. Okay, you can see the buy and sell buttons here on TradingView. You can see the time of each calendar. Okay, ticking along. What I want to see is the market. I want to get a bit of feel. Okay, so there's a small little tiny gap here. You can see. Right, on this 15-minute chart, I kind of want to see the market come back down into there. That's where I want to take a long, or even down into this wick, right? So I'm waiting for 8 a.m. to open. I'm going to jump to let's actually split the screen. Why don't we put a 1 minute time frame on the side here, okay? So we can see how price is behaving, okay? And I want to see how does price behave in this 15-minute fair value gap, right? It's only a tiny gap here. On the left hand side, this is the 15-minute time frame. You can see the time of my chart labeled there, okay, 15 minutes. And this one is a 1 minute here on the right hand side, okay. So I want to take a long, let me talk a bit about the target, okay, that I'm aiming for. It's up here, okay. Let me make this screen full. So you can see there's a lot of liquidity resting above here, right? There's a lot of people who are short, okay. So they all have their buy stops resting above all of these highs, right? So if I draw a line like this, there's all these buy stops, okay, at each one of these swing points, right, where everybody's short from. So I want to take a long to take all of that liquidity. So I want to buy here somewhere at a discount, okay, and offset here at a premium. So I'm going to be targeting that high there, and notice that high is also within this larger fair value gap. So kind of looking at 31.40, okay, as a target on this particular trade that I want to enter, okay. So we'll see if we can get a good feel. And then I'll start to scale in. We do have news at 8:15, so I need to be a little bit careful because it could be that news brings us down. You know, so if I do go long now, I want to be a little bit careful that news doesn't just dump it down again for that move up again. Okay, so at the moment I am simply monitoring price, okay, and waiting for price to drop down somewhere under these lows. So this is also liquidity right here. Okay, there are folks who've already longed at each one of these levels, okay, and that's where, for example, they have taken maybe a long, and then they are watching the market, and then they put their stops at these swing lows, okay. So the market on the way down will take that liquidity if it gets down there, and that'll be where I want to look for a buy, okay. And what I want to see is I want to see leaving this liquidity resting above here, the buy stops. Okay, because while there are people who are long from these levels, as the market's moving up, there are also people who are short. They take shorts, okay, thinking the market's going to go down because you've got people trading in both directions. And I want to see, let's clean this up a little bit. I want to see this buy side remain intact. And the market now, on this open, it's 8 a.m., okay, I want to see it take out that liquidity, right, all these stops under these lows, while leaving these highs intact, like what it's doing now. And then as it comes here, I want to look at how does it behave, and then enter a long position, and on the way up, it will then absorb these stops resting above this high, okay, to push it higher into where I believe it's going to go, which is at 3140 price level. Okay, so that's what I'm looking for. That's kind of my plan. Okay, and I've already spoken about why 3140. Okay, because we have all these. So I'm on the left-hand side now. We have all these liquidity pools resting above the market, okay, which is where I want to offset my long positions, okay. So all I'm doing right now is just waiting for the market to come down to the level that I want price to retrace into. And you can see all this liquidity on this diagonal line, which we're now starting to eat into, is just above that 15-minute fair value gap, right? And so that's, you want to see that. You want to see liquidity just above a fair value gap, okay? Because the market engineers liquidity around the level that it needs to get to, okay, the objective. So I'm going to take off these lines, and now all I'm doing is just waiting for price to get to my price point, okay. It might take 15 minutes, right, one 15-minute candle, it might take two 15-minute candles. I'll give it to maybe three 15-minute candles, right, in that third 15-minute candle. I really want to be down here, okay, otherwise then I'll just wait for 9 o'clock, which is a new hour, okay. So you can see so far it's already taken this low, there's this low to be taken, there's this low to be taken, and then this level here is the small little 15-minute fair value gap that I'm waiting for price to tap into to seek a long setup to tackle these highs. Okay, so I'm going to go mute now. I'm just going to let this do its thing, and then once we get to my point of interest, then I will unmute myself and talk more about what it is that I want to see the market do from that point forward. Okay. Okay, so you've seen that I've taken a long position. Okay, sometimes you don't get your level. It still could come back down here, but what I should have marked out is this wick here as well. And I just want to mark out the 50%. Okay, so that's the midpoint of that wick. A wick, a long one like that, is treated like a fair value gap. Okay, and marking out the midpoint of that wick is important because you could get support at that level. Okay, and also you can see that just above that level is some liquidity, right, which the market has taken. So that's why I've added there. Okay, and we can still pop down into this fair value gap, and that's okay. Okay, that's not anything to be too worried about. Let me now set the TP for this, and what I want to do is I just want to set it above this, just around there. Okay, so I've added a, did that get set? That didn't get set for some funny reason. There we go. All right, so that's the trade. Okay, and as I said, got to be a little bit careful because we do have news coming out, and that news could drop us into this. It could also drop us a little bit further. Okay, that won't change my bias. Okay, my bias is to the upside. So whether we come here or come here, doesn't matter. My bias will remain the same. Okay, so look, I'm going to go back on mute now, and we'll just see how this pans out. Okay, that's better. I just refreshed my browser screen. Not sure why the TP was not locked in. And because I added to the position, as you can see, once we got into the fair value gap that I mentioned, this wasn't changing, so I just refreshed the browser. It's now fixed up. Okay, so I've got my positions in. I'm now just waiting for TP to hit. I've done the same trade on my own account. Okay, this is obviously just a paper demo trading account here on TradingView, where I do my demonstrations, my live trade executions for my videos. But I've done the same execution in my own trading account. Okay, so I'm going to go on mute now, and we'll just wait and see how this pans out. Okay. Now, when you are starting out and you're a beginner, okay, you want to just target these levels here, right? At the closure of this down candle, right? This fair value gap. So if we take a look at this on this 15-minute time frame, we have moved up, okay? And that, if you look at the time, move up started at 7 a.m., okay? Now, most of the time, that first hour of any session is the manipulation, okay? And so we've moved up, and then we've had a pullback, right? And that pullback has eaten into this up move. And where they come into this fair value gap, which is a discount PDRA, okay? So that's discount, and the closure of this down candle, right, this gap, is premium. So when you're starting out and you're not really sure about how high probability these liquidity pools are, where where I'm targeting, this is the easy exit right there. Okay, so you would have been done in this candle, in this first 15-minute candle, you would have been done. Entry from a discount, that fair value gap that I spoke about. Exit just here at the closure of this fair value gap, this down candle, right? That's, you can see there from the high of that candle to the low of that candle, there's no overlapping, right? Only this down movement. So movement up is to rebalance all of this down movement, right? And that is straightforward. Okay, you've identified a discount, which is this bullish fair value gap, right? On this move up, you've got to have expansion first. So you've got expansion, pullback, and time. Okay, second hour of New York is 8 a.m. and we can simply target that level there, right? And not have to worry about if you're going to get these targets above. Okay, and if we just take a measurement of where we have that fidelity gap, where I added up to there, that's 86 pips. Okay, and you'll see this repeat daily, right? But you've got to align time with price. Okay, so when you're starting out, practice just like here on this platform. If you like this platform, TradingView, as I'm using it as a paper demo trading platform for these demonstration videos, you can do the same thing. Practice until you perfect it on a paper or demo trading account like this, what I'm doing here on TradingView. Okay, I do my videos using this platform. Okay, so you can see that I'm doing it live, and I do the live executions and talk about what I see. Okay, and you can see the full execution, but I'm doing the same thing, right? I've executed the same position on my own account as well. Okay, so look for that, right? If the bias is bullish, okay, instead of targeting the ultimate exit, this here, that's it. That's all we need, right? You have this pullback into discount at the right time, expansion into premium. That's it. Okay, so think about that, because that'll make your learning process very easy. Very easy. When you do this again and again and again, then you can start to think about higher targets and liquidity pools above these levels. Okay, but when you're starting out, that there, and even if you're not starting out, that there is enough. If you can perfect just that, expansion, pullback, open of New York, second hour, up into a premium from a discount, that is a model in itself. If you can do that at least once a day, that's all you need. But you've got to practice it, okay, to perfect it, right? It all comes down to how much you practice so that you can learn with confidence how these algorithms deliver price, okay? And then you can capitalize on that knowledge, on that experience, okay, when you've proven it to work for yourself. Going back on mute, I'll come back if I need to mention any more pieces of nuggets to help you understand how price is delivered and how you can take advantage of price action, okay? Okay, let's talk a little about why I've added to my position. Okay, there's a couple of things. Firstly, it's time. Okay, 10 a.m. is an important time, and I know that if 10 a.m. is coming down into a support zone, then I expect repricing high on a day where I am bullish. Okay, so 10 a.m.'s come down into a key point of interest, right? That's where we saw the expansion from. That's where I had long initially, right? You can see that's where I've longed. It's come back down at the key time. I'm still bullish, haven't hit my objective that I believe is a draw on liquidity. And so when we've come down here, I've looked at time, I've looked at price, and my bias is still bullish. Now, there's always going to be a reaction from premium PD arrays, right? Or premium pricing. So here, what we've done, we can see it on the left-hand side, we've taken out a swing high, right? And we've had a reaction from there. So the market's come back down. Okay, so premium back down to discount. I've now longed again, we'll add it to my position. okay, and expecting this now to continue higher into the next level of premium where I'm going to be taking some partials, okay? And it's the exact same thing I've done on my own account, right? So everything I'm executing here on this paper demo trading account in TradingView, I'm doing the same on my own account. So I'm just mimicking, replicating everything I'm doing in my own trading account here so that you can see exactly how I'm trading, okay? Now, the other reason, so there's time alignment, there's price alignment, but there's also higher time frame alignment, okay? So if I jump to a 4-hour time frame, let me see if I can move all the noise away so you can see this, right? There's a new 10 a.m. is a new 4-hour candle, and what this has done just prior to the new 4-hour candle, you can see it's taken out liquidity, the previous 4-hourly low, okay? So liquidity on a high time frame has also been purged, and that is in alignment with time as well, okay? So right, just pretty much at 10 a.m. as you can see, this is where it's all happening on the right hand side at 10 a.m. You can see the time down here, okay? We've taken the low of previous 4-hourly candle, so high time frame liquidity has also been purged, and that's another thing that I was looking at on a different monitor, okay? So those three things combined gives me the confidence that I'm still right on my bias, okay? And I'm still looking for repricing higher, okay? Now I still can be wrong, so I'm still only trading an amount that I'm comfortable with, right? I'm risking an amount that I'm comfortable with, okay? So that's obviously my own circumstance, okay? So that's obviously going to be an individual's own tolerance level for how much risk an individual can take based on their own account size and their own experience and how confident they are in the bias that they've chosen to be the draw on liquidity, okay? So I just wanted to provide some insight into why I've added here, okay? And that's the reasoning. So I'm going to go back on mute now and let's see how this pans out, okay? Still looking to take partials at these highs, okay? The lot that I added here at 10 a.m., I'm going to take that off here. So I'm going to take a 3 lot off here, and then I'm going to take another 4 lot off at this level here. And then the remainder I'll keep on for the high TP. So that's my current trade plan, okay? Going back on mute now. Okay, so you can see it's been very, very choppy. However, the algorithm has continued to seek liquidity. So I'm going to be taking off 3 lot once we get through these highs as per my current trade plan. Okay, and then I'm going to take off another 4 lot above this high here. Okay, and then I'll leave the remainder for the TP that's set above. Okay, so very, very choppy session, but the algorithm continued to reprice higher to take this liquidity that's sitting above these highs, okay, where people would have been short from, and stops are residing there, okay? So I'm going to close 3 lot here, close the partial, okay? So I've locked in 3 lots here, waiting for this now, okay? And then I'll take off another 4 lot once we get through those highs there. Now I'm doing the same on my personal account as well, okay? So as soon as we get through these highs, then I'll take off another 4 lot, another partial closure. Then I'll leave the remainder for the TP above here, okay? So there we go, we've taken those highs, do another partial close, 4 lot. Okay, so you can see that I have closed the majority of my position at these equal highs, and now I will leave the remainder for the higher TP, okay? And you can see I've already spoken about the entries, okay? The longs were all framed from this 15-minute fair value gap, okay? And timing was important, so I initially accumulated here, and then reaccumulation here at 10 a.m, okay? But the session was very choppy, but ultimately met the objective and have taken out majority of the position, okay? And now simply holding the remainder for the higher TP. So I'll let this record and see if we can get that final TP, but I'll be going on mute now, okay? Now this long setup from the New York Open was discussed inside of the VIP community as a signal, and specific price points, entries and targets were also provided. And the follow-up trade after this has also been provided to the VIP community. And we do it every day. We do it every day, almost every session. So if you want to learn more about how I do this and be part of the VIP community, where I provide a daily bias every single day, and throughout that day provide guidance on setups at specific times, at specific price points, to help students engage with price, to enhance their learning experience. If you want to be part of that, then the link to join the VIP community is in the description of this video. And so I invite you to click on that link and join the VIP program, the VIP community, so that you too can be part of a community that does this day in, day out, and trade with me side by side, just as I have recorded this video live for you. Okay, where I've provided specific guidance on entries, timing, and targets. And this is exactly what I do with my students inside of the VIP community. So if you want to be part of that and you want to learn how to do this, then click on the link below in the description of this video. And I hope to see you on the inside. Hope you enjoy the video. I will now talk with you in a future video.